What is going on, everybody? This is Andrew from DeFiancy. All right, guys, we're just going to jump straight into this. Hope you guys are having a good day. Right now, it is lunchtime, so the market is kind of just chopping around. Typically, you have big trading firms, people that are moving the price around. They typically take a break around lunchtime, and then you'll see volume start to pick back up afterwards. And today's been a pretty good trading session for the S&P 500 and the NASDAQ. If you're a trader, you had this pretty decent move that occurred during the morning session into the opening session today. This was driven by a few different data points that came out today. And I think it's important to kind of go into those. But first, let's just kind of go over the price action of yesterday, today, what to expect from a technical standpoint. Still bullish. I think if you remember, I'm pretty sure in the last video we talked about how the markets were very likely to stay within a range, and we had said 4,600 was going to be this psychological level. And what do you know? I mean, you go basically straight there and had a big fat rejection off of that level. If we zoom in here, you can see it was pretty gnarly. And then you have this value area low, I would say, of this particular range right here, which is roughly probably like 45, 40-ish. And then I would say the actual low of this range may end up being more closer to like this 4,500 level. So basically, prices like to range after you have these big moves. Okay, we talked about this in previous videos that when you have these kinds of very large moves to the upside or the downside, you typically have some type of choppy price action that follows it. And this is because people want to take profits, they want to hedge, and oftentimes it's just positioning gets too crowded on one side, and you get these moves like you got today, which is longs being flushed out. You had a bunch of people buy after GDP was positive this morning, with PCE estimates for tomorrow coming in lower. I don't know how they actually calculate that, but people are expecting PCE to come in cooler. We'll talk about that in a little bit. And then people just get greedy and long and think it's up only. And of course, you have larger traders who take advantage of that positioning, of that FOMO, and you get this big liquidation move to the downside. Now, this is not necessarily a game changer, but I do like this as a local top. I think that we are approaching the point now where people are definitely going to consider taking profits. And again, when you have too many people in profit and not enough people that are willing to buy at these prices, eventually you're going to explore territory lower. And I think that's where we're at now. Again, not bearish, it's just trading, right? You really are going to need quite a bit of good news consistently, injected into the veins of the market to keep it going up only. So what does that mean like over this week? Well, I think we end up having what's called an insight week, which is this candle is probably going to close somewhere in here. I think that, like I said, this range, roughly 45.50, 45.40 to 4,600 is going to be this weekly range. Wouldn't be surprised if we broke lower down to 4,500. But as of right now, I'm expecting it to really just range within these boundaries until you get some information to break you higher or lower. Leaning to the downside again from what we just talked about as the basis for that. And if you look at the NASDAQ, I mean, it's really, it's in the same position. It is a bit stronger. As you can see, it's already recovered quite a bit. Well, let's zoom in and you'll see it's already recovered more so than ES has. It's really just been chugging along. It seems to always have more strength than the S&P 500 on the upswings. And it's actually had quite a bit of strength to the downside, which is surprising. To be honest. Now, outside of the indexes, which is primarily what we like to focus on, let me get this out of the way. Looks like my little taskbar down here is in the way. I apologize. Let's look at gold. Okay, so gold is really interesting here. A lot of people are very bullish on gold, and we had talked about this in previous videos, how just very rare to have something looks this bullish. This is maybe one of the most bullish charts I've ever seen in terms of higher time frame. I mean, you have this huge consolidation, triple top situation that took about 120 days, right? I mean, this is quite remarkable when you really think about it. When you have this kind of consolidation, accumulation, When you actually break this structure to the upside, it is not going to take much to get this closer to 2,400. Now, I do believe, like on the lower time frame, that we do need to pay attention to this gap. This gap here. Typically, I don't if I'm not long, I'm not going to long until that gap is filled, unless it gets a lot higher and then comes back down and gets, creates some kind of constructive reaccumulation. I just don't like to buy after gaps up. They typically will get filled in, but certainly not bearish. I mean, that's just a trading rule I have. I'm expecting, like I said, for gold to go a lot higher from here. If we look at silver, it might even be a better opportunity than gold, depending on how you want to look at it. It has a very similar structure. The only difference I would say is that it looks like it has more runway until it really even gets anywhere close to a top. I would expect for it to break this high, much like how gold is already there. It seems to be lagging, is what I'm saying. So if you're trying to play the catch-up trade within the metal commodity game trade here, this one might be one of your better options. DXY is interesting. I just want to go through all of the TradFi stuff here very briefly, and then we'll get to crypto, some of the fundamentals, what's going on now. I don't have a strong opinion on this. We talked about this a few weeks ago. Obviously, when you have headlines, which we're about to talk about here in a minute, which is the Fed being dovish. They had some dovish comments yesterday. Again, we'll go into that to a minute, what that means. The dollar is going to go down. Anytime the dollar thinks that the Fed, or anytime the dollar is anticipating any kind of inflationary pressures, it's going to go down. Now, I mean that I need to actually clarify what I mean by that. If you anticipate that we are going to get back into a normal, a normal protocol of the Fed printing money, basically quantitative easing, like going back into what was normal for the past 10 years, there's no reason for this dollar to go up. It only wants to go up when it thinks that there's going to be the possibility that liquidity is going to be sucked out of the system, and basically rates staying higher. If there's a reason for, I should probably just say, if there's a reason for rates to stay higher, the dollar will stay up. But people are finding all of these reasons for why rates may, in fact, come down faster than anticipated because of the Fed's comments yesterday and some other things. Again, we'll get into that in a minute. But when we're in this kind of this state we're in, which is obviously the dollar selling off, it's very difficult to say where it would bottom. I don't like to trade it. I like to use it as a trading signal for other things. Okay. But if I had to give you some kind of target, I wouldn't be surprised to see this make lows down to 95. If we really get into a risk-on rally and you have the Fed cutting rates, which depending on who you ask is bullish or bearish, don't be surprised to see the dollar drop dramatically. Because if we're just going to get back into business as usual, the Fed, doing QE again, printing money, that's very inflationary, and there's no reason why the dollar would go up. That's just kind of how I see it. Things can change this, obviously. There's so many different things. I'm just saying, as of right now, this looks like it wants to go down further. It's going to take at least a couple of months, I think, to actually form a new base here, at least if you go by previous price action. I mean, it takes a while for the dollar to bottom when it really starts to downtrend, which it definitely looks like that is the case as of right now. VIX is, it's just kind of being suppressed, compressed. There's different reasons for that. There's all these conspiracy theorists that say that it's being, suppressed by the government and all those kinds of things. I'm not sure really why this happens. I just know that it is happening. And if we get a bigger pop in the VIX, you definitely are going to want to pay attention. But this looks, I don't know how you could really make a strong case for why the VIX would go up. I think it's more likely just to kind of, stay relatively flat. I mean, you had this relatively big move to 20, and there was so much FUD that got you there. I mean, it's really hard to make a bullish case for the VIX, for upside. You're going to need some really bad stuff to really get you a big pop like this, which is what people keep thinking is going to happen. Maybe it happens, but again, I'm not trading the VIX. Okay, I'm just looking at it and using it for confluence for trading the indexes. Definitely something you want to pay attention to if this starts to get, if it starts to pivot and starts to go to the upside, right? Bonds, we'll finish there with TradFi. They are continuing their, the long dated treasury bonds, which is great for collateral. We've been talking about that. Continuing to pump. So this is a well-welcomed rally. We're glad this is happening. We talked about this in the last video. I don't really think it has like a ton of room to go up, but I'm not really sure where it tops out at. I'm not shorting it, not longing it. Again, confluence for other things. It'll probably, in my opinion, start to go sideways at some point. But it remains to be seen how much leg is left for this rally. All right, let's get into some of the fundamentals on why indexes are actually. So I'll give you the technicals. Let's go into some of the fundamentals here. So we talked about how this week had a few different things on the economic calendar that could move the market, and we're seeing that today. Today we had a pretty extraordinary result of this GDP number, and I'm going to go into why I think it's kind of crazy. Was definitely not expected a few months ago. If we look at this number, it came in at 5.2%. It was expected to be about 5%. That is a huge number for the United States, when the rest of the world seems to be having a pretty big problem maintaining growth. The question is how? How is this happening? And there's all these different debates. A lot of people are saying this number isn't real. I'm not here to make that call. If people think it's real, then it's real to a certain extent for the markets. And the markets are absolutely loving this to a certain extent. Now, you may be wondering, well, doesn't the Fed not like the fact that the economy is still chugging along and it's still hot? Well, actually, if the Fed could have their way, they would have it where you have growth and disinflationary dynamics occurring, meaning you have CPI going down, PCE going down, things like that. If they could have both of those at the same time, they're definitely happy. That's a soft landing. Now, a lot of people don't believe that's possible, right? Like, how could you have disinflation if the economy is going up? If the economy is growing, expanding, won't people be spending more money? And the answer is yes, but we're still getting these disinflationary pressures dampering down inflation. And it's quite wild to watch, assuming it's real. I mean, again, people will debate if it's real or not. We're just going to assume it is. I don't think CPI is a very good metric for inflation anyway, but if people believe it, so be it. And yeah, I mean, as long as you have the economy expanding and these inflation prints are coming in showing cooling and inflation, that is like the best possible scenario for risk assets, because that indicates that your earnings are probably going to be pretty good if you continue to have this growth in the economy. And good earnings or great earnings and lowering inflation, that is like really bullish for markets. The markets, those are the two things the market really wants to see, and both are being satisfied right now. So we're not at 2% inflation yet, but it looks to me like we're going to get there, at least based on their own little metric, which may or may not actually be accurate. But that's not the point of this video. Okay, so tomorrow is going to be a big day. So we have this PCE number to come in. This is personal consumer expenditures, and it really gives the Fed a pulse on, it's another way to look at another dimension when it comes to inflation. They say they like this number more than CPI. They want people to quit spending money because that will definitely lower inflation. It's hard to see how this number could continue to come in lower if this GDP is coming in higher. It's like something is just off there, to be honest. But again, we'll see what happens there. But yeah, if that number comes in cooler tomorrow, the market's going to love that, right? And then you're going to finish off the week. And actually, let me finish on Thursday. You have personal income month over month, U.S. personal spending, U.S. unemployment claims, and U.S. pending home sales. All of those together is pretty significant. So keep an eye out. I mean, this is actually a pretty big day when you think about it. And then we're going to finish off the week with ISM manufacturing PMI and the Fed speaking, Jerome Powell in particular. So this is really important to obviously use risk management if you're in open trades. I think that's one of the reasons why the market is not wanting to just keep breaking out here. You could have any one of these events / data points could really put a damper on this rally. But to me, it looks like you're probably going to get, at least based off of the expected results for this PCE price index, a lower number. And if that's the case and these things come in neutral to good, and then Jerome Powell doesn't say anything to scare the market, this is probably just going to rally higher, even though it's definitely getting oversold. I think you're going to need some information to really throw this market off going into the end of year, which is traditionally bullish for risk assets. We've been talking about this for months now, for weeks at least. And Santa Claus rally, it's kind of a self-fulfilling prophecy. If enough people believe it, it tends to happen. Maybe that's the best explanation for it. Let's go into crypto here. So we talked about how it's just ranging around. I find this rally to be, or this consolidation, what they call this is a vertical accumulation zone. I wouldn't really call it a range. It's not really ranging. It's just kind of grinding higher. I find this fascinating, to be honest. This is one of the most fascinating structures I've seen Bitcoin print out in a while. It's incredibly bullish, to be honest. The fact that it won't even make a new low on any meaningful time frame is quite bullish. So basically what you have is just up only, really, on the weekly. And I'm expecting it to pull back at some point, but it might be considerably higher before it does. I mean, it's hard to be bearish when it just keeps printing higher like this. These typically do not just fall over. It could, obviously, if you have a lot of FUD that comes out, but it seems to me it's probably going to expand higher before it comes down. So what does that mean looking forward? I don't know where you put a target, but 40K, 42K, somewhere in here, I think is a reasonable target if this thing does expand higher. I think your downside, if you were to get some information, or if a whale just wakes up one morning and is like, hey, I'm out, and causes a cascading liquidation event, I mean, maybe you get down to 35.5, but this is not looking good for bears here. It's really not. I mean, yes, this is not a small move, roughly like 6%, but they're risking 6% if they short here for around 12. Not great risk reward in my opinion. Now, some people will say, well, that's not fair. You could have more downside. So, yeah, maybe it is balanced. So if you take the extreme case, I think you could get a 10% move, about a 10% move up higher. So yeah, maybe it actually is more of a balanced trade. I like to stay with the momentum. I want the charts to prove to me that it's lost momentum before I flip bearish on this. And so far, it's just not doing that. Things look good. But these are the levels I would look for potential pivots. If it were to get down to this level, I think this gets bought up very quickly, and that's why I don't think it gets there very easy. And if it were to get to 42, based off of the charts, I would think that would be a level that you would start to get quite a bit of resistance. That happens to be our, if I'm not mistaken, that happens to be our 0.5 fib level. I think, yeah, that's our 0.5 fib level. If it gets there, expect some pretty significant selling. But if it were to give you a dip down to 33, or best case at this point, I think for bears is they would get a move. I shouldn't say best case, but one of the, I guess, within the realm of realistic or decent probability, for lack of a better word, maybe you get back to 31.5. If it were to get there again, it's going to get bought pretty quickly. In fact, if it gets there, I think if it were to even get there, it'd probably be so bad where you wouldn't want to buy it. I mean, that's just such an obvious level that people would want to long. So if it gets down, if it gets to this 34 level, I'm expecting people to jump on that pretty quick. Anyway, let's look at ETH. Different kind of chart for ETH, not the same scenario. I mean, it is doing this vertical accumulation. It just is not as strong, and it's having a problem breaking over this 2100 level. I'm not going to be surprised to see this break down. I think it'd be an opportunity, if it were to come back to 1850 or lower. But as of right now, I mean, it's just fighting this top. Once it breaks this top, though, this 2100 level roughly, this is going to be, I would expect this to move pretty aggressive. Because again, we talk about this, in other videos. People have been shorting ETH now for like 2 years at this level. Okay, at some point, this is not going to work for them. I mean, there's people who will literally hang on to shorts and just build their positions, believe it or not. And this is where people will logically put their stop losses above these levels. And once you start to move into this white space here, I mean, it's going to just rip through those, in my opinion. It's much like what we saw with Bitcoin after it broke. It's a very similar situation here at 30K. That's basically what ETH is doing. ETH is at its a 30K equivalency level. If you really look at it objectively, I think. So expect it to extend pretty strong to the upside if it does break that. The altcoins look pretty good here, I think. They're just kind of consolidating. They've had a meaningful pullback. If you look at Avalanche, for example, it pulled back like 20%. If you look at Solana, depending on where you want to take this, I'm just going to be generous and say the top was somewhere in here. I mean, this thing has, pulled back over 15%. It's really like 20% if you take the wicks. Some people see that as enough of a pullback to get in, and people are doing it. That's why it has this constructive price action. If Bitcoin breaks higher, I'm expecting this to break higher. I'm expecting Avalanche. Altcoins in general, alt season is going to be insane, I think, in a few months after the ETF most likely, maybe before. But things look really good for altcoins, in my opinion, at this point. I mean, they're just not overbought, really, on the meaningful time frames. Yes, I guess technically if you use RSI as a metric there, yeah, they're getting overbought. But I'm talking about just from a higher time frame. Like if you look at this, these things are still down 85%, like Avalanche. I mean, you're getting an 85% discount from all-time high. Now, I know what people are thinking that see this video. Well, Andrew, that was a bubble. Who cares? I mean, we're going to get into another bubble. I think what people will realize is you're probably going to end up going higher than these levels at some point. Maybe it takes 2 years, but people are going to see this as an 85% discount from all-time high. Okay, maybe that's left curve, maybe that's stupid, silly, whatever, but that's how I see it. I think that's how other people will see it. Again, I'm not saying people go all in on altcoins, but they look pretty good here, and I'm going to be adding, I'll tell you that. And if you're in the Discord, you'll know a lot about the ones that we like. Before we cut this video off here, let's talk a little bit about some of the altcoin moves today. Okay. Over the last 24 hours, you got IOTA, which, wow, old friend IOTA. I haven't seen this thing in the news or in the headlines trending in a while. I'm not really sure what's going on right now with IOTA. I know, like, when I first bought IOTA back in 2017, it was focused on IoT, Internet of Things, applications for blockchains. I guess that's probably what they're doing still. But it's up today. I'm sure they had some kind of update or upgrade or some kind of announcement likely. Thorchain is an absolute beast. This is probably one of the most slept on ecosystems. So this is a Cosmos chain application that allows you to swap between native assets. This thing is amazing. We talked about this in another video, but it's kind of in its own league. It's in a league of its own at this point for if you're wanting to swap between native assets. It's a cross-chain platform, and they have some really incredible yields, actually. If you look at, I thought I had it pulled up. I guess I don't have it pulled up, but I think like right now I think you can earn like 7% on Bitcoin. You can earn like a 7% yield on Bitcoin, and then they have some liquidity pools. If you don't know what that is, that's where you actually provide two different assets. For example, like USDC and ETH, and those yields were like really high. I mean, they were like in the over 100% last time I checked. That's pretty awesome. At least somewhere around 100%. I could be wrong, but they were pretty high for liquidity LP positions. Let's look at some other ones here. Maker. If you don't know what Maker is, you're going to want to get familiar with that. I think that's going to be one of the hotter governance tokens / DeFi tokens, whatever you want to call it. I mean, it's a DeFi token, but it's a governance token for a DeFi platform. Doesn't really have utility, but it could in the future. They have a revenue model. Maker is a powerhouse within several different, it's in several different aspects. Like they have a real world asset revenue model there. Like they're earning income from real world assets. People are using it to actually put assets on chain. Maybe more than anybody else. I'd have to actually look at the data, but at one point I think they were leading that. They're competing with other platforms like Aave, and then obviously people will supply collateral and mint, take out DAI loans against it. That's what the Maker protocol is known for, is the DAI stablecoin. But they're also, again, to keep in mind, is they're also in the what they call RWAs, real world asset market, whatever you want to call it. And I think when people do jump into DeFi and crypto, real world assets are going to be one of the most common sense use cases for blockchain. Real estate on chain, anything that has value is going to be on chain. Well, value is relative, but I think you get what I mean. A lot of different assets that are in the real world are going to be on chain at some point, and I think this is the beginning. People will naturally see Maker as a competitor in that arena. Okay. What else we got here that I want to talk about? I could go over so many of these things, but I think that's all I really want to cover today. Until next time, happy hunting, friends.